Hi everybody, this is Ospreyeye from mychartcoach.com, and we're going to take a look at some ticker symbols that were in play on Friday in this video. And first up, we're going to take a look at CYTR. As you can see here, it closed up 43%, so that was a huge move. Congrats everyone. It closed at 67 on RSI, so there's still room to run until 70. If you can see here in the last two big runs, it did get above 70 on each run, but notice the last run, it didn't get quite as high as the run before. So that's something to keep in mind. Fasto did close right at 80, so it's right at the overbought power zone. The last time it hit that level, it did top out. You can see here there was a crossover on ADX. That was a very nice move. Yeah, the green line crossed the red line to the upside, and the black line crossed the red line. So you have plus DI crossing minus DI, and ADX crossing minus DI as well. So that's signaling that the chart is heating up. So the thing on this chart is that first of all, there was a bullish reversal confirmation down here. This white candle here on the 26 formed bullish piercing line reversal pattern, and that pattern was confirmed on Friday. And so yeah, so as you can see here, the white candle on Friday confirmed that pattern. There was also a close above the middle Bollinger Band at 0.611. That's the dotted purple line here in the middle. That's the key level to hold in a pullback. Notice there is an unfilled gap now between high of day on Thursday and low of day on Friday. The share price came up and it hit the key resistance level, which is the closing price back here on May the 30th. That is lined up here with the open back here in April. This formed a double top, and then the share price pulled back, and so now it's back up at the double top level. You can see here the high of day hit that level and pulled back, and so to break out higher, CYTR is going to need to close above this red horizontal resistance line. If it can't get above 90, turn that level into support, it could pull back. On a pullback, it did close well above the upper Bollinger Band and above the 300-day simple moving average. You want to see the 300 turn into support. That's currently at 0.753. That's the first key support level to hold. And then if the candles do pull back into the bands, you've got this high close back here in June, which is just about 69. And then you have EMA 4 here at 68 as well. So that's going to be a key support zone on a pullback if the share price does pull below the 300-day simple moving average. Notice there was a giant volume spike. There was a parabolic SAR bullish flip. The green dots were above the candles, and now they are below. There was also MACD bull crosses on both time frames. So you can see the MACD line cross the signal line on both the 8, 13, and 5 and the 12, 26, and 9. So this is, you know, the MACD bull crosses and the PSAR bull flip and the move back above the middle Bollinger Band. Those are all signals that a possible new uptrend is going to begin. Now that's all dependent on whether or not it can stay above the 300-day simple moving average and above this 90 resistance zone. If you look here on this daily chart, you'll see the next resistance. If it can get above this double top zone, we'll call it the 90 resistance zone, then you have to go all the way back here into what is this, July 2016, where a gap was created. You can see here the top of the gap is this candle, and then the open was down here. Actually, way down here was the open on this candle, and then it ended up closing with a high of day on where this red horizontal resistance line is, and that is the bottom of the gap. And so this is going to be the next key level to break. You can see here this close is also lined up. Notice that this close from back here in 2016, where there was another gap. You can see down here, and this candle right here filled this gap. I mean, we could break this down more and more, but yeah, so basically, yeah, this filled this gap between these two candles. This move right here, it came back up, it hit that level, which is the top of this gap, and pulled back. And so this is the top of the gap level between these two candles, and then the next key level to break is going to be the bottom of this other gap, which is at about 108 or so, 109, 108. It's this red line right here. So that's going to be the next big level. It's a dollar is always a big resistance level for penny stocks. You know, if it can get above those levels, then you're talking about this giant gap. There's this huge unfilled space, and the top of the gap is all the way up here at 230. So yeah, so we have to keep an eye on CYTR. If you look at the weekly chart, this is a weekly chart that we've posted before, and these annotations are before from the last time this chart was created. And as you can see here, the key resistance levels to break was this November high close, this close right here in November, and you can see here it closed above that level, and then it pulled back, and then it had been trying to turn that level into support, and notice how the candles have been able to do that, and there's a push above that level, and then also above this July high close here, this fourth week of July close. Notice how there was a close above that level as well, and then also the candles had turned the 50-week moving average into support. That's currently at 52. That's this green line. So notice the candles are above the 50-week moving average and above the middle Bollinger Band, which is at 56. So it has a nice uptrend going. And so now the big level to break is this close right here, this doji. And so let's see here. This is lining up with the close on Friday, and so you can see it closed right at that key resistance level. You can't make this up, and so it needs to close above that level, and that would be a huge signal of more upside on this weekly chart. You've got the 100-week moving average way up here at 148, so that is the next simple moving average target. If it can get above this 82 resistance level, the last week in May closing price, and then you can see here that you've got this dollar level is another big level to break. And so yeah, so the weekly chart is looking like it's heating up here. You can see here there was a parabolic SAR bullish flip last week, and so that's a good sign. You can see that volume is even greater than it was on that last volume spike. There was good volume behind the move with 62 million shares traded last week, and then MACD, you can see there was a bullish crossover. It had been pinched down here, and so it's starting a bullish crossover on the 8, 13, and 5. So yeah, so this could break out higher. Just keep an eye on that 82 level. You want to see a close above that level. The weekly candle does not set until the closing bell on Friday. Okay, let's take a look at ZN. Okay, this chart is had a nice bounce on Friday. A bullish reversal pattern formed. A bullish one white soldier. Okay, you can see that there were 5 red candles in a row, and then the open was above the close. The Friday open is the bottom of this candle, and it was above the closing price on Thursday, and the close on Friday was above the open on Thursday, and so that creates bullish one white soldier, and so that's a nice bullish reversal pattern. We're going to be looking for bullish reversal confirmation this week. If you look here, we've got let's see here. We've got the middle Bollinger Band right here is the next key level to break at 431. Okay, so that's going to be the big resistance level. If it can close above the middle Bollinger Band and turn that level into support, then it could get a new uptrend going. Notice it's at the bottom of this channel. Yeah, it's going to be you know, the huge level to break next week. 431. If you can get above 430, if that can happen, then 475 is a big level. You've got 525 is a big level, and 550. 550 is lining up with the descending resistance, and then ultimately you've got the closing price here on July the 7th. That is going to be a key level to break, a huge level. If it can close above that level, that would signal breakout higher. Right now, it's just real important for ZN to turn the middle Bollinger Band into support and get a new uptrend going. If it fails to break that middle Bollinger Band, you could see a drop down here to the 50-day simple moving average at 293. That's a big support level to hold on a pullback. You know, MACD, it's starting to hook. You can see the MACD line starting to hook, and so bulls want to see that start to angle upward, going for a crossover on the signal line. Okay, and finally we're going to look at XXII. Okay, this is a stock that's in the marijuana sector, and the chart is heating up. We've got RSI now back above 50 at 59, and so there's room to run until the 70 overbought level. Fasto did close at 95, so it is temporarily overbought. You could see a pullback just to test the middle Bollinger Band and the 50-day simple moving average. There was a crossover here on ADX with plus DI crossing minus DI and ADX to the upside. So bulls want to see that green line stay above the black and the red line. So that's a nice move. This is on a 3-day run. You can notice the parabolic SAR bullish flip, the green dots flip below the candle, so that's nice. And then the close above the purple dotted line and the green line here, the middle Bollinger Band and the 50-day simple moving average at basically 161 and 162. The close above those two levels is signaling the possible start of a new uptrend, so that was a really nice close. And on a pullback, you want to see those levels hold. Okay, as long as candles are forming above the 50-day simple moving average and the middle Bollinger Band, that's going to signal more upside potential. Notice you've got the 300, the 200, the 100, and then now the 50 and the middle Bollinger Band. The middle Bollinger Band is also the 20-day simple moving average. So this is currently trading above all the moving averages. So it's also above the EMAs 4, 8, and 13. So that's, you know, as bullish as it gets. You know, it's super strong right now. The next key level to break is going to be this upper Bollinger Band at basically 182. So if it can do that, then we're looking at back here on June the what is that? June the 9th. The closing price on June the 9th, which is right below 190. Okay, we'll call it 189. The 189, 190 zone. If it can close above that level, then that's going to signal XXII is breaking out higher. So next week, the big level to break, we'll call it the 190. The big level to hold is 161, 162. So keep an eye on it. There could be a new uptrend starting. Notice there's giant volume behind the move. Huge volume spike. And then there was a bullish crossover down here on the 8, 13, and 5 MACD. And then we've got the 12, 26, and 9 is pinched. So a crossover on that would signal a possible start of a new uptrend. If you look back here, the reason why we like these bullish crossovers, notice back here in June when there was a bullish crossover on both time frames, that signaled the start of a big run. And so you know, we'll see if it can get more going here. If that middle Bollinger Band can turn into support. There was a really nice close on Friday on the 15-minute chart. Okay, so this is the XXII 15-minute chart. It did close here at 100 on Fasto. RSI is at 65, so it's not above 70 yet. And the bullish close was the close above intraday high close resistance, which was the closing price here at 1145. So the close above that level is signaling more upside potential. Notice that it was also on a volume spike, and so there was nice buying into the close. The middle Bollinger Band held at 170, and so you want to see that level hold on Monday. If that level breaks, then you could see a drop down here. The big level to hold is going to be this 300 simple moving average at 156. Okay, and then the intraday support level was 162. Okay, so yeah, so this had a nice move on the 15-minute chart into the close. If you notice here, the 8, 13, and 5 is pinched, and so for the bulls, you want to see the MACD line cross the signal line to the upside. That's going to signal that the 15-minute chart is heating up again, and then if the 12, 26, and 9 crosses over, that's going to be confirming that this is ready to head higher. Notice that the green dots are below the candles. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.